Thank you all for being here. It's 5 o'clock, and we'll call this meeting of the Human Resource and Insurance Committee meeting to order. Today, Tuesday, October the 21st. Let me read the emergency evacuation procedure. In the event of an emergency evacuation, an alarm will sound. Everyone should exit the building by way of the nearest stairwell in a safe and effective manner. If the nearest stairwell is blocked by smoke, use the other stairwell. Do not use the elevator. Once you have reached the main floor, follow the exit signs to exit the building. Quickly proceed away from the building. Please be mindful of others evacuating and of emergency vehicles. Jody, please call the roll.
Mr. Ed Mitchell, absent. Phyllis Crisp. Here. Gary Farmer. Here. Mike Lewis.
Here.
Sheriff Blount. Here. David Merle. Bill Dunlap. Mike Kaler. Tom Stennett. Here. Grady Caskey.
You've got 3 absent. We have a quorum. We'll take, is there any public input on items on the agenda? Seeing none. Move to item 3, approval of the September 29, 2014 minutes. Take a motion to approve those minutes. Got those? Very good. All those in favor say aye. Aye. Any opposed? Okay, we have discussion, possible action on dental rates for 2015. Jenny?
Thank you, sir. You all should have in your packet a chart that has the 5-year dental plan rate claims history. So we do have just a topic that we need to cover on this. And Mr. Chairman, if you would recognize Drew Mann from Trinity, he has the information for us.
Mr. Mann, you are recognized.
Thank you, committee members. You can see in front of you, we put together a 5-year dental rate history. And the reason why we did this is Blue Cross came to us 2 weeks ago and asked for a 10% increase on the dental rates. We had already done a marketing effort for you guys. And when I say the word marketing, that means we sent it out for bids, okay? So we had already sent it out to bids to Lincoln Financial, Delta Dental, Guardian, and Mutual of Omaha. None of those folks were competitive. Delta was slightly competitive, and let me kind of give you inside baseball as to why that is. You're fine. You got a gun, I don't. My clients who are happy with Blue Cross Dental, it's hard for me ever to unwind that. And the reason why folks sometimes are not happy with Blue Cross Dental is there are certain dentists that are unwilling to take the Blue Cross reimbursement. The reason why is they believe the reimbursement is too small. The other insurance companies reimburse the dentists more than Blue Cross does. Well, by that very nature, they should be more expensive if they're having to pay the dentist more for the same services. Does that make sense? So if I have a group that is satisfied with the network of dentists that Blue Cross offers, it's really hard for me to ever unwind that. And so you say, well, how do I know that they're happy or not happy? Well, sometimes in my business, we're in the no news is good news world, because if there was a large population of folks that were unhappy with your dental program, I promise you guys would be hearing about it, and my office would be hearing about it. We went back to Blue Cross and were able to get them down to a 5% increase. I met with Jenny and the other folks here at the county and said, here's what's going on, and here's the legitimacy of why that is. If you could look at your sheet with me, you'll see in 2010, I'm going to skip to the bottom, that area in yellow, a 76% loss ratio. That means every dollar that we paid in claims, Blue Cross paid out 76 cents. Every dollar we paid in premium, Blue Cross paid out 76 cents in claims. You can see there 88%, 87, 91, and 90. We have effectively, if you look at the rates in 2010 all the way through 2014, we're pretty close to what we were paying several years ago, but our claims have continued to go up, and the insurance companies do not like they'd rather see us in the 80-20, 85-15 area of premium to claims, and so that's why they asked for that 5%. What we were able to negotiate on your behalf is that 5% increase will not go into effect until July of 15 and will last through the end of December of 2016. Again, this rate change is not going to go into effect until July and will run through December of 16. And I will tell you, this was a whole lot of poker and bluffing we had to play to get them to do this. And so we were, this is a very good financial arrangement for the county. Any questions regarding this?
I do, Drew. Is this going to be county rate or is this going to be employees?
Say that one more time,
Is
sir.
this going to be for the county to pick up or is this going to be for the employees to pick up?
That's a decision that the HR committee would make, and you would not need to make that until the July timeframe.
The number of employees or participants continues to go down, correct?
That is true, yes, sir.
Well, I looked at this, and when I looked at the $2, whatever it is, $2 and added to it. You look at that, and you look at the number of participants, you're talking about $2,000. That's not a significant amount of money. I don't, maybe you can tell me where, if you take the number of participants times the premium, I can't come up with where you're saying the employee contributions are.
Okay, I'm not exactly following you, so let me.
Okay, if you take the number of participants that you're showing, average participation, single family,
Yes, sir.
if you take that and you multiply it out toward what you say the premiums are for single and family, and I did both of those, and then you say the employee contributions are $491 or $521,747.
I think I understand your question. Let me
Where
try
does
to
that come
try to clear. That's what the employee pays for the dental insurance, and the difference between if you look in 2014, the difference between the 4924 and above that, the 7275.
Right.
The county funds that amount. Do you follow me?
Right.
So that's how you're exactly right. You can't get there all the way with just the employee contributions.
So you have to add, for family, for example, you would have to add the 7275 and the 4924.
No, sir. The difference between the 4924 and the 7275 is what the county is funding.
Okay, so the total cost for a family premium is 7275.
That's correct.
So you multiply that times 883, and that should give you.
It should, unless I've done bad math. I could have a problem in my spreadsheet.
That's not what I came up with.
Okay, well, let me just do this. I think Jody just informed me that I've done bad math. So if you guys will let me just make sure my spreadsheet is correct, and I'll get it to you guys first thing in the morning.
Okay.
Let me say what I do know, and because I do know that I'm correct on this. There will be no rate change for your dental program effective January 1. Okay? The rate change will be a 5% increase effective July 1 that the committee and or commission will then choose how to fund that 5%. Your options would be for the county to fully fund it, for the employee to fully fund it, or to do a share of the 5%.
Any further discussion on?
What, one final thing. Their benefits are still capped at $1,000 per participant.
No change
correct?
in the benefits, yes, sir.
No change in that.
There's no change at all in the benefits.
Okay.
Same policy you had last year.
So basically, their reasoning behind the rate increase is because of that bottom loss ratio.
That is correct.
Okay.
Any further discussion?
Thank you.
Thank you, Drew. Item number 5, discussion and possible action on flex spending accounts. Jenny?
Thank you. Yes, on the flexible spending accounts, there's been a couple of changes for some regulations for the 2015 plan year that we will need to discuss, and if you will, recognize Drew. He can give us the details on it, but we're going to have to make a choice on this one as far as what we decide to do with grace periods or allowing a rollover for flexible spending. So if Drew could give us the details on that, that'd be great.
Drew?
In October, actually, of 2013, the Department of Labor came out and said, we're now going to allow you to roll over $500 of your flexible spending accounts for what was 2014. Most of our clients had already been in the throes of trying to determine what they were going to roll out for their benefit plan, and so I didn't have a single client that took advantage of that. Let me explain to you how it works today to remind you guys. Flexible spending accounts, this is the employee money. The employee can say, I'm talking about the medical, I'm not talking about the dependent daycare portion of FSA. Okay? What it allows them to do is take out money pre-tax in order to fund medical and dental and vision expenses that they have throughout the year. The benefit to the employee is if I sign up for $1,000, I have access to that $1,000 day one of the plan year, January 1, theoretically. So I'll use me. Let's say I wanted to have LASIK surgery done. I put $2,000 in my flex. Well, my first payroll cycle, I've only had $50 taken out, or $100 or whatever that math ends up being, okay? But I go to the Campbell, Cunningham, and Taylor, and I go have my LASIKs done. I file a claim with the FSA. The FSA fronts me that full cost of LASIKs. Let's just say for easy math, it's $2,000. Then over the course of payroll deductions, I pay the county back at $50 or $100 a pay cycle or whatever I've signed up for until I end up filling that bucket, that $2,000 bucket. Does that make sense? The downside to employees has always been whatever they sign up for, if they don't use it by the end of the plan year, that money goes away. It gets absorbed back in the plan. It's called the use it or lose it rule. I can explain FSAs all day long. As soon as I bring up use it or lose it rule, half the room shuts down because they're just afraid they're going to lose money. Somebody's trying to gig them. Just not a good thing. Well, so what now the federal government has said is we're going to allow you to roll over $500 a year. What that's going to prevent is unnecessary spending to hurry up and get rid of that money that you have left in the account because now I know I've got $500 available, okay? So what I would tell you is all of our clients are doing the $500 rollover, but what you lose is the 60-day grace period that you can have claims in the next year and still today you can still have claims in the next year and still use those. The IRS says the DOL says you can only do one or two things. You can either have the $500 rollover provision or you can use the grace period provision, but we're not going to give you both. Again, in a very rare circumstance, can I make a case for that the employee is better off under the grace period? If someone was going to have an enormously expensive procedure, which with y'all's health plan of having a max out of pocket of less than $2,000, it's hard to imagine how this could happen. But if someone wanted to put $2,500 in one year and $2,500 in the next year, wait and use the $2,500 in the grace period, they could then use another $2,500 that same year. But I mean, you're talking 1 in a million. That's very, very rare because y'all's health plan benefits are so rich that I think the average person I think the average person on your plan's putting in $600 a year. It's a pretty low number. It's not those huge numbers. So our recommendation is to allow the employees to roll that $500 over every year. I can tell you from explaining this to employees for 20 years, it's a provision. I'm out there doing meetings all the time right now. It's a provision that's going to be well received. Any questions, Mr. Chairman?
So you can't split that and say 250 into the, okay.
Yeah, it's all or none. It's rollover or grace period.
Mr. Farmer?
Mr. Chairman,
You can just poke me from there.
I'd like to make a motion to change hours to a $500 rollover. Forward that to full commission for approval.
A motion by Mr. Farmer, second from Sheriff Brown, from Tom Stinnett. Any further discussion? Need a roll call. Do a voice vote. All those in favor say aye. Aye. Any opposed? Motion carries. Thank you, Drew. And we'll move to item 6, discussion and possible action of the 2015 health plan rates. Jenny?
Yeah, we'll want to recognize Drew again on this, if that's okay, to discuss. We had hoped to have these for you, but some things have changed, so I think Drew's got that information.
Drew, this will probably be your last time.
I think so. I'm going to be brief. We had hoped that the state auditors would be complete with their audit this time so we could bring you guys the rate information. Our goal will be at the January meeting to bring you that rate information that you guys would be debating whether or not how you want to address employee rates for the July time period. But at this point in time, we're waiting on state auditor just agreeing on numbers.
Any questions and discussion for Drew? Thank you, Drew. Item 7 is discussion and possible action of the Kronos contract. Jenny?
Thank you. So you, when the agenda was sent out to you, you had a link in the email to the contract that you could review. And there was also included a memo from Bill Ronner, our project lead, to basically kind of summarize where we are, where we've been, and where we're at, kind of a thing. So Bill is here and can address any questions or just kind of to give us a brief update as well.
Bill?
Thank you, Mr. Chairman and committee members. This is a very brief update from my perspective. The last time I was here, it was to brief you on the project itself, to request approval to go forward with Kronos as the preferred vendor, and to request funding approval. The big difference between now and the last time is that we have completed contract discussions with Kronos. You have the contract package, which, as I recall, is 170 some odd pages. We will be going forward to the County Commission requesting approval to execute the contract with Kronos and actually begin the project. So that's really the only difference between now and when I was here before, and I'm happy to answer any questions.
Bill, were there any changes or things in the contract that we didn't anticipate going into the drawing of the contract?
Not from my perspective. Our starting point was a contract that the city of Franklin had negotiated successfully with Kronos, and it was more attractive to us than the basic Kronos contract that they also offered us as a starting point. We negotiated some things favorably, and some things were clarified that were not of any concern like we initially had. So I think I can speak for the entire project team that we're very comfortable with the contract as it stands now.
Very good, thank you.
This
Mr.
thing,
Dunlap?
if it passes commission the 30th, what's your time frame on getting everything implemented and then the program started for each department?
It's my understanding this matter will not go before the commission on October the 30th. It will be November the 20th. If we can get it executed then I would anticipate a start date of December the 1st if Kronos is ready. It will be. The only thing we're waiting on at this point is contract execution, approval from the commission and contract execution.
Any other questions, discussion?
Just one.
I had understood it was like 20 weeks.
The
Start reading the pages, so I didn't write the whole
Yes.
thing.
Yes, I know.
But it was 20 weeks?
Well, the implementation plan, you can expect to last, the estimate for our implementation plan is 8 to 9 months. There's a lot of front-end work to do.
So is that from December?
Yes, sir.
Okay.
Any other questions, discussion? Bill, thank you.
Thank you. Thank you all.
Okay, is there any public input on items not on the agenda?
Mr. Chairman, I want to address one thing. At the July meeting, there was a comment made about, there was an inquiry made about why teachers were reimbursed for part of their insurance cost of their insurance, and that all employees should be treated equally. And I agree with that. Unfortunately, the state doesn't see it that way. Educators are treated differently. They're treated differently under the state constitution, and if you look at the legislature every year, the bills that they pass is aimed directly at education, most of them. They want to tell us what to teach, when to teach it, how to teach it, and what the outcome should be. Part of the state law is that under PECA, it's called PECA, replaced the old EPNA, teachers choose advocates or choose representatives to negotiate certain items under a scope of negotiations. One of those items under negotiations is salary benefits. One of those items is insurance. The Board of Education is required by law to sit down with teacher representatives and negotiate those items. When we were informed, I was part of that process is the reason that I can address it. When we were informed that there were going to be increases in the cost of the insurance out of pocket, and those, we negotiated that. And we negotiated to have the Board of Education pay the $25 for teachers. At first, we were told there wasn't money there. We found the money, and we made an agreement, a memorandum of understanding, went to the board, and the board approved it. And that was a legal binding contract. We were a little dismayed when we received notification that the county commission was not going to abide by that contract. We worked with the board to reach a resolution of it. The association had no cause of action against the commission because we didn't have an agreement with the commission. We had an agreement with the Board of Education. So we worked out an agreement with the Board of Education where they would reimburse teachers for that $25. So that was a negotiated contract, and that's why the teachers were reimbursed for that. We receive, the school system receives somewhere between $3.5 to $4.5 million every year from sources outside the county to be paid toward teacher insurance. So we are treated differently. If we want to treat everybody equally, I'm all for that. Let's pay everybody equal, but that doesn't happen either. If we're going to have an administrator that gets a 5% salary increase, then teachers should get 5%. If teachers are frozen on a salary schedule, then supervisors should be frozen. That's the only way you're going to get equity. But teachers are not treated differently under the law, and that's why that agreement was negotiated and that agreement happened, was because it was done under the law.
May I speak, Mr. Chairman?
Yes, sir.
I was the one that brought up the difference, and I was speaking for 300 employees at the sheriff's office. And my purpose of that, I understand that y'all negotiate contracts, it's education department, I respect that very much. But we voted to put the burden, I think, to increase the insurance cost of $25 per individual. My purpose for finding that out, if that was the case, I was going to make a motion to rescind General County having to pay the $25 when education didn't. And that was my purpose for that.
Mr. Dunlap?
Thank you, Mr. Chairman. I think since '94, I have read in depth the county uniform road law. I am the principal of the county uniform road law in Blount County. And I agree with Jimbo, this was set up for all, nothing against school, Mr. Caskey, but all employees were to pay that. That uniform road law gives me the right to set the salaries for all the employees of the highway department. This coming budget year, I will adjust that.
Anyone else wish to speak? Entertain a motion to adjourn. Meeting is adjourned.